My hurdle rate's 30%, integration-free, risk-free. I've done the same deal 90 times in a row.
Mm-hmm.
And the product of the company is digital credit. What we're offering is STRC. We're offering you a product that's going to pay you a 10% dividend yield with a very tax-efficient return of capital dividend, right? And so if I'm offering you something that pays you 10% dividends in a credit universe that offers you 4%, give me one reason why you wouldn't buy that. Why is it that the entire world wouldn't sell their $100 trillion of garbage credit that yields you 1/3 of what we're offering after tax? Why wouldn't you just sell it all and buy Stretch? Give me the one reason. Well, I'm going to give you two reasons.
Okay, let's hear them.
You haven't heard of it. You don't understand it.
Yep.
And the second reason is you think that the issuer has a credit risk. So
yeah,
when we're going off, you know, you bring me 10 good deals and I buy 10 companies and I get distracted by that. I'm so distracted by that. I'm on CNBC talking about all those other things. I'm not talking about Stretch, STRC. And then you're a credit investor and, you know, when the message is, yeah, I have like $5 of capital for every dollar of this instrument, it's like, I get it. But then you're like, but tell me about this other thing you just did. And I heard they're getting sued or
I see it.
That's going to take a year.
It distracts you. It creates credit risk for you.
You're creating opacity and you're creating a dilutive distraction. You actually get a diversification discount. Like the person buying this instrument simply wants to hear, you have the money to back the instrument.
Right.
If I just spent 5 years, every day of my life for 5 years, to explain and convince you that Bitcoin is digital capital and I have a lot of it.
Yeah.
You think I want to show up in the 6th year and explain that I also started buying these other 16 undervalued companies and we're really good at doing takeovers and integrating them and it's...
Yeah, that would seem strange for you to do. I get that.
Again, it's a distraction for us. We've got, in my opinion, we have the world's greatest product.
Yeah, but what about buying other like distressed Bitcoin treasury companies that are trading below
Again,
NAV?
the point is, it's a distraction.
Yeah, just the process of doing it.
How long do you think it takes to close the deal?
Yeah.
A year?
Yeah.
It takes a year to close the deal. Do you know all of the liabilities that are embedded in the balance sheet? No.
Right.
When do you find that out? In 6 months?
Yeah, some point
9
during
months?
the process, I guess. Yeah.
The point is, why would I buy Bitcoin with all of the whole message for 5 years is Bitcoin doesn't have employees. It doesn't have management teams. It doesn't have counterparty risk. It doesn't have supply chains. It doesn't have leases to break. It doesn't have Nexus. It doesn't have all of the 30 pages of liabilities that companies have. So why would I want to go and buy 30 pages of liability? Yeah, and here's the point, right? I can build a digital building in one day with no risk. Why? You know, you're like, okay, well, I can do this in one day at 1 times revenue. You've done it 90 times in a row. And then some dude comes along and says, well, you know, I have a building this summer that'll take a year to close the deal. And I think it's like a 20% discount, but I'm going to need you to sign up to unlimited liability for the next year.
Right.
And I need your investors to sign up to unlimited bottomless lot. Maybe the deal won't close. Maybe you'll get sued for $18 billion of intellectual property rights, shareholder litigation or something.
Right.
Why? It's like penny wise and pound foolish.
It's smart.
Why would you absorb unlimited bottomless liability and distraction when, you know, it's like, don't look a gift horse in the mouth. You get the chance to buy Bitcoin with zero risk, zero integration headache, and you put it out on the wire next Monday, and everybody understands whether the risk profile... You understand, like, if I buy $1 billion of Bitcoin, you're the investor, you can see immediately whether the risk profile of the company increased or decreased that minute.
Mm-hmm.
If I enter into $1 billion of corporate acquisitions, you will not know for you might not know for 10 years, Alex.
That's right.
You understand, like if you buy a company, you could have embedded liabilities in the company that you don't know about for 10 years.
That's right.
It destroyed HP.
Yeah.
You remember the HP acquisition when
Yeah.
they bought Autonomy and they paid $10 billion for a company that was worth $1 billion? They took a $9 or $10 billion write-off.
Yeah. Yeah.
Let me say it a different way if I'm not enthusiastic enough in my answer.
It's good. It's a good answer. I get it.
I watched 100 companies in my industry go bankrupt over 30 years.
Yeah.
Sorry, go out of business. 100 companies. You know how they all failed? Dilutive acquisitions. If I had to trace the number one source of a failure of a publicly traded company, it's the CEO starts doing roll-ups and buying other companies that they think are helpful. Every single competitor of mine, they did these acquisitions, and you end up just buying a company, overpaying, then you buy another company, you think you got a good deal, and it blows up in your face, and you buy a third company, and then all your good employees quit because they hate the fact you bought the third company. You buy the fourth company, and your shareholders quit. You buy the fifth company, and eventually you're on the sixth company, your financials collapse, your stock collapses, and you sell yourself. And you get amalgamated into the great beast of some mega software conglomerate.
Yeah.
And you can't remember their names, probably. That's where you go to die. And so I think you buy things when you run out of ways to grow. Okay, but here's my idea of how I'm going to grow. I'm going to sell a digital credit instrument that's going to give you a 10% dividend with 80 to 90% of the volatility of Bitcoin stripped off it. And I'm going to sell it to 5% of the credit market. And that's $15 trillion by my calculation. Right now, $30 trillion in 10 years. So I have an idea for $30 trillion.
That's a pretty big idea.
And you're telling me I should come up with a second idea? And I'm like, and the only thing that's the number one way to destroy or undermine your first idea for the 30 trillion is to come up with a second idea and get distracted, take on other credit risk, right? Take on other distractions. And so let me make one more point, Alex. Like, I mean, the other day I checked, we have like $60 billion of capital.
Yeah.
You understand? We could buy anything.
Right.
Right. Yeah. You understand, like investment bankers, like we could buy half of the Russell 2000.
Yeah.
Right. We could buy half of the publicly traded companies or merge with them. We could probably merge with or buy 37,000 public companies and 37 million private companies. And we could invest in every idea you could possibly imagine. We could also raise $1 billion from any credit investor in a week, maybe overnight if we wanted, right? When you start with $60 billion, it's not hard to find someone that will lend you $1 billion.
Right. That's right.
Every one of those ideas would be dilutive, distraction. And the number of bad ideas that people throw at you goes up exponentially the more money you have. And
how many bad ideas do you hear?
It's like,
is it endless?
We could be an insurance company. We could do reinsurance. We could underwrite this risk. We could become a bank. We could become a commodities trading exchange. We could, like, never ending. I could literally list you 1,000 in an hour, and then I could tell you the 100 reasons why each of the 1,000 doesn't make sense. And after I gave you 100,000 reasons for not to expand, I would reduce it down to the simple maxism that Marcus Aurelius gave us 2,000 years ago. Just because you can do a thing doesn't mean you should do a thing, right? And I think humility dictates if you have a good idea, right? The most important days of your life, the day you're born and the day you figure out why. Okay? The arrogant guy thinks he was put on earth to solve 100 problems. The humble person, if they're fortunate enough to think they're put on earth with a mission to solve one problem, you just got given a gift, right? And so what we figured out is we can create digital credit, and it's better than $300 trillion of other credit. And whether or not it solves 1% of the market's problem or 5% or 10% or 20% or 0.1%, doesn't really matter, right? It's a life's work to create good digital credit. If you're fortunate enough to be given the opportunity to do something, you should laser-like focus on that thing, because you want to look at the history of failure. It's alpha males that solved one thing and think that that's solved and done, and they come up with 10 more things to solve.
Yeah.
Right? It's the Napoleon complex. It's like, I now have to spread the French language and the French way of life to the frozen steppes and the tundra of Russia in the winter. And somehow, have you ever gathered 10,000 of your favorite friends and tried to walk across Europe? Like 1,000 miles? It's not a good idea in the 21st century, but somehow Napoleon got the idea that he might march 600,000 people, you know, from Paris to Moscow in 3 months, conquer the nation, declare victory, and come back unscathed. It was never a good idea. Yeah. But it was the 14th bad idea he'd had in like, in 14 years. But, you know, hope springs eternal. People come up with these outrageous, ridiculous ideas. And it's like, you know, maybe you might want to have just noted that the odds of a Corsican actually rising to rule France were like 1 in 100 million.
Yeah.
And stopped there.
And just let it ride.
Instead of we got to conquer Egypt, and we got to conquer Germany, and we got to conquer Spain, and we got to conquer UK, and we got to conquer Russia, and we got to conquer Poland, et cetera, et cetera, et cetera. But it happens. It continues to happen. And I will get never-ending number of pitches for one more thing that we could do. And I would say you come back to Steve Jobs, right? And he just reminded people, we say no to a lot more things at Apple than yes.
I think this is a good answer. This
right?
You've
focus.